Hello everyone, I'm Jeff Goodwin with the Office of State Auditor, and on behalf of our Auditor Shad White, I'd like to thank you for joining us for our presentation on internal controls. Before we get started, you'll notice on the first slide there's a 1-800 number. That number is 1-800-321-1275. Our office has a division referred to as the Technical Assistance Division. They're there to answer your questions every working day to make certain that we can give you advice before you make a decision. If you have a question, please call that number and seek guidance before you make a decision. We'll jump into this. I wish I could tell you this was a very glamorous and really thrilling subject, but it's not. But it is important to protect the integrity and to protect you personally. So we'll just briefly hit some highlights because this can go really into depth. But what we're here to talk about today, we're going to talk about financial management, internal controls, and a way to safeguard assets placed in your trust and to protect you. And we'll talk a little more about that. So let's start with kind of diving into what internal controls means. Internal control is an integral part of an organization's management plan that provides reasonable assurance of the accomplishments of the goals and objectives, efficiency of operations, reliability of information, and legal compliance. Internal controls is management's responsibility. That means the folks who govern an entity from the top down are responsible. There are 5 elements of internal control. There's control environment. What do we exist amongst? There's risk assessment. What is most at risk? Control activities. How are the activities being monitored? Information and communication, and ultimately monitoring. And all of those are integral parts of the whole process. We're going to jump to what, it's never a popular subject, but we're going to talk a little bit about fraud because that's one of the things, in addition to protecting you, that internal controls are designed to do. We don't want fraud to happen. Back in 2004, there was a report released called the Wells Report. It studied 508 fraud cases over a 2-year period. It included the non-for-profit industry. The report drew several conclusions about fraud that was perpetrated in the workplace. Some of the things the report found that smaller organizations had a greater risk of experiencing losses due to fraud. There's a direct correlation between the amount a person improperly received and their position in the organization. And most perpetrators who were caught were first-time offenders. We'll summarize that just a little bit. Smaller organizations had a greater risk. Smaller organizations have fewer people to carve duties up amongst. So that leaves room for some opportunity there. Of course, the more that you're in custody of, the more there is an opportunity. So we'll dive into that a little deeper in a few moments. The report concluded that most fraud was not discovered in the course of a routine audit. Most cases were brought to the forefront by a whistleblower. We know that prevention is the most cost-effective defense. Now, when it comes to fraud not being discovered in a routine audit, our office conducts a lot of audits. We also contract a lot of audits. Those audits routinely and regularly lead to an investigation. So I can assure you their audits can lead to a discovery of fraud. People don't often do what you expect, so you need to inspect, if that makes sense. Here's just a silly example, but somebody ordered a cake and you can see best wishes. Underneath that, we will miss you. I don't think they meant for the middle line to be there. Always remember, people do what you inspect, not what you expect. So it doesn't do you any good to have a great set of internal control policies and procedures manuals and everything else that nobody ever opens, nobody ever reads, nobody documents that they read. They need to clearly understand them and move forward from there. We'll talk a little bit about what fraud is. Webster's defines it as such. The intentional perversion of the truth in order to induce another to part with something of value or to surrender a legal right. Now, Mississippi Code Section 97-710 goes a little bit further. It states that knowingly or willingly falsifies, conceals, or covers up by trick, scheme, or device a material fact or makes any false, fictitious, or fraudulent statements or representations or makes use of any false writing or document knowing the same to contain any false, fictitious, or fraudulent statement or entry. So you can see that's pretty encompassing. We want to stay away from fraud. What are examples of fraud? You've got cash larceny, skimming, fraudulent billing schemes, fraudulent payroll schemes, complex embezzlements, bogus expense reimbursements. One that's come to light a whole lot outside of the organizations is check tampering or check washing, complex corruption schemes requiring collusion, fraudulent statements, and that's just a sample, but those are some of the most widely seen abuses. What are red flags of fraud? I always like to talk about this. Changes in an employee lifestyle. If you are a deputy clerk in a small county and somebody pulls up in a couple of $100,000 sports car next to you, chances are something in their lifestyle has changed. I'm not saying they have done something wrong, but something has changed. Irregular or explained variances from normal amounts. If you've got reports that you run every day and all of a sudden you're starting to see a certain drawer or a certain activity that's short or having miscalculations, that's an indication. Shortages in inventory. We find this a lot with particularly in road departments where they store their own fuel and they get to the end of the year should have 300 gallons and guess what? There's no fuel. So somewhere we've had a breakdown in the controls that make sure that doesn't happen. Files come up missing and documents come up missing. Employee comments about fraud are ignored. If someone in the office is saying something about fraud, it needs to be taken serious by management. Failure to take action on audit findings. We see this year after year with some entities where last 3 years they've had this same finding. No one's taken action. One major thing that you need to be aware of is poorly written or enforced internal controls. There again, the best written internal controls, if they're not enforced, are worthless. One thing to also be aware of is the refusal to relinquish the custody of records. If you start asking somebody for something, they say, no, I'm not going to give you that. That should be a red flag. Believe it or not, people who regularly work overtime. That's not saying dedicated employees are necessarily doing something wrong, but a lot of people can't leave till they're the last one to leave the office if they're doing something wrong. And angry or nonsensical answers to just routine audit questions. Lashing out. All right, we'll talk a little bit about accounting and compliance, reducing fraud. We want to provide information and assistance. Knowledge is key. We're going to talk in a minute about the fraud triangle. But more importantly, knowledge is the key. You need to know what the controls should be. And if we're not following, do they need to be changed or do we just need to adhere to them? There's what's known as the fraud triangle, and it consists of the incentive or pressure to commit fraud, the opportunity to commit fraud, which is the absence of controls and effective controls, management's ability to bypass controls, and then the individual's rationalization that it's okay to commit fraud. So the three big angles there are the incentive or pressure to commit fraud, the opportunity, and the rationalization. And that's what the triangle basically looks like. Moving forward, who commits fraud? Any gender, any race or age, the problem employee, the perfect employee, the person with sloppy records, the person with immaculate records, people you couldn't function without, people you think work all the time or an asset. You just simply must not rely on trust. You need to verify. That's the whole purpose of controls. Why do people commit fraud? Well, there are a number of reasons, but these are amongst the top that we see. People develop a gambling problem, family money problem, health problem, girlfriend or boyfriend on the side, and I'll caution you on that. That carries a whole nother set of consequences outside the scope of this section of the law. Keeping up appearances, can't make ends meet, or just plain crooked. So regardless of what makes people commit fraud, it does exist. All kinds of justifications have been found, but in this study, the one that I have encountered most in my professional career is people intend to only borrow the money to the next payday or to the next time they come into some cash. Before you know it, they can't pay that back and they're still short the next month, and so it begins to grow. Then people begin to justify because they don't pay me what I'm worth, or I should have been made a supervisor, or I should have been promoted. I think everybody else here is doing the same thing. My coworkers do it, and this place wastes so much money, It won't make any difference what I take. Those are just some of the rationales that begin to fill people's minds with the justification to commit fraud. So where do internal controls come in? Once again, what are internal controls? Internal controls are a plan of an organization and procedures designed to prevent and detect problems that may occur in an entity's operations. This plan and organization will vary depending on the special needs of the entity. The key word there to me is prevent. It's far better to prevent problems than to detect them, because then you have two problems once you've detected them. Preventative internal controls, these are designed, just like I said, to prevent a problem from occurring. We don't ever want it to happen. So internal controls, here's some examples of preventative internal control. Like a computer application that checks the validity of an entry for wrong or invalid account numbers. Making sure employees understand your personnel policies. That reduces the risk of violation of the Fair Labor Standards Act. A review of voided receipts for propriety and validity prior to approval prevents inappropriate voids. You want to make certain that if there's a void, who authorized it, why was it done, did we document it? And documentation becomes the key. 2 years from now, when you're going through a financial statement audit, if you don't make notes and you don't document, you may not remember why, and there may have been a very valid reason. So documentation becomes important. There are detective internal controls. They do exactly what they sound like. They detect problems that may have already occurred. So now we know we've got a problem. Examples of detective internal controls include exception reports that list incorrect or invalid entries or transaction. A comparison of cash receipts to monthly reports will detect deposits posted to incorrect or erroneous accounts. Change tracking and traceability. These are incredibly important now that computer systems are very quick and very rapid. We want to prepare reports that ensure changes to systems or data are tracked and traceable, allowing for the identification of unauthorized modifications. We're not saying that a transaction might not occur and may need to be modified, but there should be a justification and a reason and a way to track that change. All right, so now that you think I'm sitting here accusing you of being a crook, I want to share with you the good news. Internal controls protect the innocent. Let's take, for example, you're a clerk or a deputy clerk in an office somewhere in Mississippi. You have been entrusted with a cash drawer. It's time to go to lunch. Somebody says, well, I'll fill in for you. Do you let them operate out of your drawer, or do you lock your drawer and say, here you go? You don't ever want to share that drawer, because even if the person's honest as the day is long, and you're honest as the day is long, if something goes wrong, now we have two people to try to figure out what happened. You don't need to ever share your cash drawers. You never need to share your computer passwords with anyone other than the supervisor that gave them to you. That is one surefire way to protect yourself. Let's talk a little bit about general internal controls. Personnel. Well, clearly, folks should be competent and trustworthy with clearly defined and documented job descriptions and procedures manuals. Applicable statutes document lines of authority. Who do I answer to? If there's a problem, where should I go? Periodic updates of job descriptions ensure that employees are aware of their duties. This can become very important if a personnel issue arises with an employee. We see this oftentimes when an issue comes up. Well, that's not really my duty. I've been doing it for the last 2 years, but it's not in my job description. So we want to document, and these documents have to be constantly changing for the changes within the office. General internal controls, authorization of procedures. These procedures should include a thorough review of supporting information to verify the propriety and validity of transactions. Think about it this way. You've got a purchase order. The purchase order matches the receiving report. You've got an invoice. There are different signatures to document, hey, this is a valid claim. Another example, time records should be signed by the employee and a supervisor with direct knowledge of the employee's hours worked. I remember as a young auditor, it was expected in a municipality that the clerk would sign off on everyone's timesheet. Well, if you've got 5 fire stations plus a paid police department, that clerk's going to have to be in several different spots at one time, 3 different times a day potentially, That's not very realistic. So we've got to have supervisory staff that will sign that timesheet saying, yes, so-and-so worked that shift that day. That's more important, so they need to be tailored to your situation. Segregation of duties is probably one of the most important internal controls that you can have. Segregation of duties should reduce the occurrence of errors or irregularities. A person should not have responsibility for more than one of the following areas: authorization, custody, and record keeping. Now that becomes particularly difficult, and we'll talk about how it does in smaller offices versus larger offices. All right, further talking about general internal controls and safeguarding assets. When we're talking about safeguarding assets, of course, the most important thing is the physical restrictions are most important type of protective measure for safeguarding assets. Safe combinations should be changed when someone who knows it is terminated. So this employee has left. I've literally worked in governmental facilities that had a beautiful safe, a huge safe. The combination was lost years ago, so it was left open, and they just simply shut the door with a huge amount of cash in the evening. That's probably not a really good idea. We probably need to figure out something about the combination. Critical forms such as receipts and checks should be secured. If you're in an entity that requires purchase orders, the signature on a purchase order basically creates a contract. So that's like having a contract laying around if they're just sitting out in the hall. Sometimes you'll need an alarm system to adequately protect large amounts of cash or other valuable assets, say such as an evidence room and or your data. Further talking about internal controls. Internal controls can be tailored with different activities performed by the entity in question. Controls can be developed for collecting money, expenditures, payroll, safeguarding assets, financial accounting. We often get asked, well, if this is so important, why don't you just write a manual and tell us what you want us to do? And we'll talk a little more in depth, but each office is unique. Some people have 40 people in their office. Some people may only have 3. Kind of hard to write one size fits all for that. We'll talk a little bit about internal controls for expenditures. You want to make sure bills are approved by the department heads or the person with authority to make sure that that is a valid bill. You want to stamp each bill paid so that it can't be resubmitted for a duplicate payment. Compare the paid bills to the checks issued for payment to determine the correct amount paid and or payee. Verify that the goods billed have been received, and verify that the goods billed are for the entity and not the individual. So all of those are just common sense approaches, but you need to have a written policy to check that and check that each and every time an expenditure occurs. Further going into internal control for safeguarding assets. We mentioned before, keep valuable items under lock and key. Assign equipment to individuals who are responsible and do so in writing. Have insurance policies covering valuable assets. We want to put property tags and other valuable items. Keep a list of inventory and verify it periodically. I want to take just a minute and talk about the equipment. Nowadays, most everyone is assigned a laptop in a lot of situations or some type of equipment. You usually sign a form for that equipment. When it's time to trade that back in, you want to make sure that paperwork gets done. You don't want somebody coming back 2 years later saying, well, what did you do with your old computer? So protect yourself and protect the entity. Internal controls for financial accounting. We want to make sure all transactions have supporting documentation. This is not like your personal checkbook where you can just write something in it and not worry about a description. We've got to know what it was for. There's a proper chain of command that should be written and well documented for approval of transactions. Management should periodically look at a sample of transactions, if not all transactions, and look at the validity. Particularly restricted funds, such as grant funds, should be monitored to ensure that they are used in accordance with the grant terms. Internal control weaknesses. Any good system of internal control is likely to have a weakness somewhere. We want to keep working to assess those and eliminate them. But one of the weaknesses is inappropriate access to assets. For example, Employees who only need read writes to a computer program shouldn't be able to go in and make changes. Only authorized individuals should be given keys to offices and safes and buildings and alarm codes. We don't want just everybody walking around the community to have that information. There will be times, though, when it's time to override a control. Let's say, for example, we've got a snowstorm and only 3 people can make it into the office. Well, we're not going to function like a normal day, maybe. At times, it's necessary to bypass policies and procedures and to perform specific tasks. If there's little time to complete the task, the normal person's not there or is unavailable, someone's got to do those duties. Any override of that system should always be adequately documented. What happened? Who stepped in and did the job? How did we make sure we covered our bases on this? So that documentation would then need to be a permanent record of why we deviated from our procedures. Inherent weaknesses. We talked about this a moment ago. No system of controls is perfect. For example, there may not be a sufficient number of employees to enable proper segregation of duties within the entity. Internal controls should be reviewed periodically to evaluate their effectiveness. And there are always ways, if you can't segregate duties perfectly, to mitigate risk by pulling additional management in. Cost benefit. The cost to implement an internal control or a specific internal control should not exceed the value of the benefit it provides. For example, the cost of a computer may justify a lock or a combination on a door, but not the cost of a camera and alarm system for the entire building. So you want to be prudent with what we're going to do to protect those assets and to protect yourself without just going overboard. There are a lot of benefits that can come from controls that have no cost, such as reassignment of job duties. If you see a conflict, that conflict should be carved up by management to make sure we got as much segregation of duties as we possibly can. It doesn't cost anything upon receipt to stamp a check for deposit only. Having a supervisor approve voided receipts. That way we know somebody else said, yes, this was an error. Requiring 2 signatures on checks doesn't cost anything. It only takes a few moments. I will say this, if you're the second signature on a check, you need to look at supporting documentation. We're not there just to get that second signature. So look at some supporting documentation. You're putting your name on the line. Again, on behalf of the auditor, I want to thank you. I also want to encourage you, if you have questions about these topics or any topic as it relates to a governmental entity in the state of Mississippi, please call our 1-800 number, 1-800-321-1275, and ask for assistance from our Technical Assistance Division. They're here to help. Thank you.